look, I mean, look at hash ribbons. It, with price momentum included, it's only ever flashed after the bear market was over, right? After the bear market was over. And it just flashed again a couple of weeks ago. So
hey, welcome back everybody to Altcoin Daily. My name's Austin, joined by returning friend of the channel, quant analyst, as well as a PhD in engineering, Benjamin Cowen. Thanks for joining me.
Thanks for having me back on the show. Pleasure to be here as always. And I will tell my own subscribers that are watching this, make sure you guys subscribe to Altcoin Daily. He's been making videos for longer than I have.
Appreciate you, man. And besides crypto, dude, what's new with you?
Not a whole lot. I mean, well, I guess there are some things where I'm going to have my fourth kid in December.
Whoa.
So that's a big one, but
congrats.
Thanks. Yeah, so that's going to be a big change, but I guess going from 3 to 4 isn't like a huge difference, but that's probably the biggest thing. And other than that, just doing the same thing I always do.
Do you have a name for the kid yet?
No, not yet. No, we're still trying to figure that out.
I want to invite the chat down below. Make it realistic, but make it, pretty good name for boy or girl. We'll be checking the chat. But Ben.
It is a girl. It is a girl. It is a
okay.
Girl.
Good note. Good note. I want to jump right in. I want to talk all about, the macro environment, Bitcoin. Let's just start with the CPI data came out this last week. What was it and what are your thoughts on it?
Yeah, so it came out a little higher than I think most people expected. We know that headline CPI still dropped a little bit, down from 8.5 to 8.3% year over year, which is at least a move in the right direction, but it's not as big of a move as I think a lot of people were hoping for, kind of showing that inflation could be kind of a little stickier than maybe the majority of people thought. And then you had core CPI, which is arguably what the Fed cares about more, which is excluding, food and energy, that came in at 6.3% year over year, which has gone up from 5.9%, which we saw last month. So, I think after that, what we saw on markets market participants are now pricing in no lower than a 75 basis point rate hike by the Fed next week. And now they're even potentially considering 100 basis point rate hike.
Aggressive.
According to the markets. Yeah, I mean, I still think the most likely one is 75 basis points. Which is, more or less where it has been for the last several weeks, at least the general expectations. But now markets are even pricing in another 75 basis point rate hike in November, which that's also relatively new. So clearly this has taken a hit on risk assets because, the Fed is being forced to stay hawkish longer than I think a lot of people were hoping they would.
And they've been ultra aggressive all year. It looks like this tells us they're kind of, at least for the next few months, going to stay aggressive. What does that mean for Bitcoin? Is that it's simply lower lows?
Unfortunately, I do think that the general direction is lower. And the only reason I say that is, don't fight the Fed is sort of the general mantra. And we had a decade-long period of QE. And now that we're going into a period of quantitative tightening, it's important to remember that we should not be fighting the Fed when they are not only raising interest rates, but also, rolling off their balance sheet. Furthermore, there are a lot of indicators that, I'm sure you are astutely aware of when it comes to crypto. And I remember watching you a lot back in 2018, and we remember how long that bear market dragged on. It felt like it was, honestly, at times it just felt like it was never going to end. And one of the interesting things with that is, and I'm going to actually try to pull up my screen here so I can show you a couple things. Let's see, can you see my screen now?
Yep, good to go.
Yeah, so if we were to just sort of compare this bear market to the last one, so we're the green line, and the last two, in fact, we're basically where we always have been at this point. In September, we're about 70% down or so. Everyone's arguing over whether the bottom's in or not. and it goes on for months as we sort of just don't move much in either direction. And you look at this type of chart and you could argue that there's a decent chance we could see lower lows. And this doesn't even include sort of the macro outlook from the Fed. So could we bounce around for a while? Sure. I think there's a good chance we bounce around for a while. But at the end of the day, it's hard to imagine not at least seeing one more scary period to sort of finalize the bear market.
We're the green.
Yeah, we're the green line, and this red line up here was the 2014 bear market, and then the orange line was the 2018 bear market. And you can see that in 2018, it took another, it took another couple months for the bear market to finally be over.
So I was going to make the correlation that, oh, they seem to be lengthening, but no, 2014 was longer than 2018. So I can't make that conclusion.
Right. Yeah. I think some people say, and I've looked at this before, is that you can measure it from like, say, like the April peak, and say that this one is longer potentially than the last one. But I don't really think that carries. Honestly, I don't really think it carries a ton of weight. I was hoping at one point that the bull market would go on longer, but it didn't. So I'm just sort of following prior bear markets, and also trying to keep an eye on what is the Fed doing? Are they likely going to remain hawkish, which it seems like they are. And if that's the case, I think we need to just remind ourselves that, look, we could have a lower low. It's not the end of the world if we do. And if we do have a lower low, we're basically just getting presented the same opportunities that we were presented back in the end of 2018.
True. I think the true bulls are hoping for that lower low, because I'd buy more personally.
Right.
Based on that chart, or just based on all the data you sort of aggregate in your mind, when and where could you see that Bitcoin bottom being? Like in the next 6 months and down to 11K, or what do you think?
So let me go back to my screen. So it's a great question. One of the charts, it's a dubious chart. I'll grant you that. It's not something you should take to the bank. But if you look at like the running 1-year ROI, it has done a fairly good job of bottoming at around 0.2 or so. You can see it's happened several times. It doesn't always get the bottom per se, but you can see that it more or less bottoms at around 0.2 or so. And we actually have this little tool that I can put in a future projection to see.
Wait, what is this? This is return on investment for the individual.
This is like your running 1-year ROI. So what would your return be today had you bought a year ago?
Okay, got you.
So if we were to project out a price in, say, December 7th, let's just put, say, like $14,000 and see what that would look like if we were to go there. You can see how it's starting to look very similar to prior bear market, to prior bottoms on the 1-year ROI. If you were to change this to, say, 12,000, it gets it closer. If you were to, say, change it to even 11,000, it's basically right at the 0.2 area. So is that a possibility? I think it could be. And there's actually a couple more charts that are sort of holding out for a potential lower low. I should be clear though, I'm sort of cherry picking some of these things, because actually a lot of the there's plenty of charts that say the bottom's already in.
Really?
Yeah, there are certainly some charts that say that. I'm still leaning more towards the bearish side, because I like to be more conservative, and I like to see all the indicators flip. And I would also like to see the Fed pivot as well. I think that would be a nice thing. But another indicator that might be worth looking at is sort of like the balance price. And we can look at that over here, and you can see that in prior bear markets, Bitcoin always bottomed below where the balance price was. So
what does that mean?
So it happened over here in 2011, in 2015, in 2018. So the balance price is just equal to the transferred price minus the realized price. And this is a lot of on-chain stuff that we could go to, but it ultimately comes down to, like the cost basis on chain goes into it a lot. And, a lot of times people look at the sort of like the price of Bitcoin, but there's also something different, right? There's also like the realized price, and it sort of takes into account, what is sort of the price of Bitcoin that people, like the on average, that people sort of actually transacted with. If you look at this, by the way, right now, the balance price is actually at just over 16K. So if we did have some type of a lower low, let's say like 13K, 14K, somewhere in that area, it would basically just be repeating what we have seen in the past. So This is, this is one indicator that is still sort of holding out, but I'll remind people there's still plenty of indicators that I could actually look at that would actually say the bottom is already in, right? I mean, I don't necessarily believe it because there are still some that are holding out, but look at hash ribbons. It, with price momentum included, it's only ever flashed after the bear market was over, right? After the bear market was over, and it just flashed again a couple of weeks ago, or a few weeks ago. So I think there's enough reason for me in my mind, there's enough reason to have a Bitcoin position, right? But there's also enough reason to maintain a cash position in case we do ultimately get that lower low and we see kind of like a more major final capitulation. Because while there are a lot of indicators that have bottomed, there still are some that say we haven't. For instance, like timeframes after the all-time high of taking about a year, or percentage drawdown. Is a 75% drawdown enough in a bear market, which is what we are so far. So a lot of conflicting indicators. I think it makes sense to be hedged both ways, but certainly I think people should be prepared for potentially more downside, especially if equities see more downside.
And we've talked about realized price and hash ribbons a little bit on our channel, but for the audience at home, if we're moving through these a little fast, I'm going to put, Ben, all your links down below. They can sort of dig in themselves through your Twitter and your site.
Right. And I can just hover over, people can pause the screen right here as I sort of hover over hash ribbons, and they can just read it for themselves if they're not sure.
Pause the stream, hit the like button, maybe not even that order. But let's flip it back and just give me an in summation. You kind of already said it, but in summation, you showed us some bullish and bearish charts, general views for the next 2 to 6 months.
I think for the next 2 to 6 months, the way I'm sort of playing the market and thinking about it is going into it with some Bitcoin, because hey, who knows, right? Who knows what happens? The Fed maybe gets, maybe they pivot sooner than everyone thinks they're going to. I certainly don't think that's my base case, but who knows? Go into it, I think, with some cash. Why? Because if equities put in lower low, then there's a really great chance that you're going to see Bitcoin and Ether put in a lower low as well, and also in general the altcoin market could simply put in a lower low. And if we're heading into a recession, which arguably we're already in one, and we've been in one for essentially the entire year, a lot of history shows us that the bottom for risk assets like the stock market, and then of course by association crypto, bottoms about 2/3 of the way into the recession, right? Not at the end of the recession. Remember, the stock market's forward looking. So just when it feels like it can't get any worse is probably where the bottom, will likely be. And even though the recession might drag out for a little bit longer than 2 to 6 months, the bottom could actually be in on the next 2 to 6 months.
And it sounds like the main catalyst that would flip you into a raging bull is if the Fed would announce, hey, we're done raising rates, because they have been pretty accurate this last year in doing what they say they're going to do.
Yeah, and I mean, I think cutting rates would be a big help too. I mean, look, we've seen this cycle play out so many times, right? Like, yeah, 2014, we have 2018, we have 2022. I mean, sometimes it almost seems too easy, right? I don't personally feel the conviction that the halving is the only thing that sets, the bull markets into motion. I don't think that's necessarily true. I do think it provides a good narrative, and you can kind of see it potentially setting up again because it's out in 2024. Hopefully inflation can come back down and the Fed will pivot by that time. And then, yeah, that would turn me back into a bull.
Benjamin Cowen, thanks so much for joining us. Links for all your stuff are down below. We're going to do a companion piece just talking about ETH post-merge, thoughts throughout the rest of this year. But final thoughts for the Altcoin Daily Army.
Yeah, final thoughts are look, bear markets are tough to get through, and no one really likes them. But the people that did the best in 2020 and 2021 were the people that were buying back in late 2018 and 2019. It wasn't the people that waited until 2021 to buy. So if you've made it this far, try to just push on for a few more months, and hopefully we'll see the same opportunities presented that we saw back in 2018.